the payroll numbers look spectacular, and there clearly is a gobbling up of any slack in the US as far as jobs are concerned. Payrolls just don't seem to be growing in line with expectations. Why are wages as low as they are? I mean, we only got a very modest 0.2% increase.
No, I think, I mean, you're looking at some of these structural changes that make the sort of endpoint for these wages are going to be about a percentage point lower than we've seen in the past. So part of it is just our historical context in terms of how high wage growth will be. From a real perspective, it's still going to be about the same, but inflation is lower, those processes are lower. I think the other side of it is just that there is still a decent amount of residual slack out there. And I think one of the interesting things, I mean, we saw the market react rather oddly in terms of a strong above consensus payroll print, and the market came off because of some of those wage dynamics. I think you looked at the participation rate. I think there were some saying this was going to be structurally low for even longer. Well, now that participation rate's starting to rise, which means there's more people coming into the labor market. So there is still more slack out there. And every time we think risks are skewed to the upside for wages, there's something else that's coming along.
Janet Yellen's been conscious about that fact, hasn't she, for a while? I mean, the rest of the market has been saying, well, just look at the unemployment rate and the rest of the factors, and, you know, you need to start pushing up interest rates. But she's always been conscious about this ability to have a huge pool of untapped workers that have been sort of on the sidelines because of the financial crisis.
Right. I mean, the big question has been just, would they come back? I mean, once you're unemployed for such a significant amount of time, it's difficult to look through that pool and say, are these people who can easily return to the labor market? Are we hiring for the jobs that they left for? Can they be retrained? And you're starting to see that the answer is with a long enough trend of job growth, and as that unemployment rate falls and across the board, whether U3, U6, all these other measures, they're all starting to compress to cyclical lows, you are starting to see that dribble in. But I think there's still a question how many more people will come.
Where do you think the jobs are coming back in? Because if you delve into the numbers, you saw manufacturing was up. Do you think it's going into some of the older industries, or is it still hard to tell where those jobs are being found at this stage?
I mean, when you look to the report here, it was very broad-based. You know, there was a little bit of pullback on the retail side, but really sector by sector, this was a broad-based job growth that you're getting here. You know, we did see when oil prices collapsed, the mining sector within the US, the commodity-based services side was dramatically pulled back. That's really back to normal now. So I think part of what you saw over the last 6 to 9 months was a bit of recovery on those areas that had been dealing with very low commodity prices, very low inflation. But that's obviously a small part of the US economy, hence why you were still able to run it sort of above trend job growth. Well, now that's caught up. You're starting to get some weather effects. February was also much better from a weather side, so I think there was a little bit of a short term, but these are pretty broad-based gains that we're seeing.
Looking forward, what expectation do you have around much shifting in the dot plot here, and what do you think the implications are then for the Treasury market, for the dollar, and also for how many rate hikes we get this year?
I think you're at a point where the risks are to the upside in terms of where those dots can go marginally. You know, I think the Fed went through a period of reducing those dots, trying to get to something. And now I think when you look to it, 2017 of about 3 dots seems about fair. It'd be very difficult for that to go up. But it takes only 2 Fed voters to change their mind, or Fed participants to change their mind to move up 2018, only 1 to move up 2019. So I think going into this week, seeing the positive attitude we've seen from so many Fed speakers, the fact that only half had actually incorporated any fiscal expectations before, it's a pretty low hurdle to see those dot plots shift higher.